Ladies and gentlemen, good day and welcome to the Apex Frozen Foods Limited Q4 and FY'25 earnings conference call. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ritik Hathiyan-Gadi from Stellar IR. Thank you, and over to you, sir.
Good morning, everyone, and thank you for joining us today. We have with us the senior management team of Apex Frozen Foods Limited, Mr. Chaudhary Karuturi, Managing Director and Chief Financial Officer, and Mr. Durga Prasad, Senior Manager, Accounts, who will represent Apex Frozen Foods Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and full year ended 31st March 2025, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company's beliefs, opinions, and expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect development that occurs after a statement is made. I now hand over the conference to Mr. Chaudhary Karuturi. Thank you, and over to you, sir.
Sir, you can please proceed.
Oh, sorry. Good morning, everyone, and thank you for joining us on this investor call for Q4 and FY'25. We have uploaded the investor presentation on the website of the stock exchanges, and we do hope that you had a chance to go through it. Some of the key trends that we probably discussed on the last quarter's conference call have largely played out in Q4 FY'25. That is like the inventory liquidation in overseas markets leading up to an uptick in the overall demand, mainly in the USA. Consequently, the global shrimp prices remained firm. However, while favorable global pricing scenario typically encourages Indian shrimp farmers to increase cultivation, thereby resulting in required supply and easing of farm gate prices, the global trade uncertainties are to be watched out for. Coming to the company's performance, in the Q4 of FY'25, we witnessed an improvement in revenue and profitability when compared with Q4 of FY'24. The sequential quarter-on-quarter decline in revenue led by lower shrimp sales is in line with the seasonality factor in general. The net revenue grew around 22% year-on-year to rupees 197 crores in Q4 of FY'25, mainly led by higher realizations amidst a marginal growth of 2% year-on-year in volume sold. In Q4 FY'25, our average realization increased to rupees 794 per kilo, reflecting a year-over-year growth of 20% and a sequential quarter-on-quarter growth of 6%. Gross profit grew 24% year-on-year to rupees 59 crores in Q4 FY'25, with margin at approximately 30%. On a sequential basis, gross profit margin improved 500 bps quarter-on-quarter from 25% in Q3 FY'25, as farm gate prices, which had elevated in Q3 FY'25, started correcting following the global trade uncertainties. Our average purchase cost of raw materials was rupees 358 per kilo in Q4 of FY'25, representing a 4% decrease quarter-on-quarter. EBITDA grew 174% year-on-year and 23% quarter-on-quarter to rupees 78 million. PAT positive, profit after tax positive at rupees 20 million in Q4 FY'25, as against a loss of rupees 4 million in Q4 FY'24 and a loss of rupees 2 million in Q3 FY'25. Shrimp sales grew 2% year-on-year to 2,349 metric tons in Q4 FY'25, as against 2,302 metric tons in Q4 FY'24. For FY'25, it stood at 10,534 metric tons as against 10,949 metric tons in FY'24. The European Union market, while excluding the United Kingdom, remained strong throughout the period. The company achieved an year-on-year sales growth of 70% in Q4 FY'25 and 41% in the full fiscal year of FY'25. Consequently, the EU market's contribution to the overall sales mix increased to 36% in Q4 FY'25, and which is up from 22% in Q4 of FY'24, and to 39% in FY'25, compared to 26% in FY'24. This growth has contributed to a more geographically diverse sales portfolio, which gives us the confidence in the EU market's long-term potential. Amid improving global demand, shrimp prices have shown a consistent upward trend. Our average realization in Q4 FY'25 has grown 20% year-on-year and 6% quarter-on-quarter to rupees 794 per kilo. For the full year of FY'25, it grew by 5% year-on-year to rupees 729 per kilo from 695 per kilo in FY'24. Going forward, global trade uncertainties remain following the US trade tariff announcements, reciprocal tariffs announcement. We do remain cautiously optimistic for the near term. Some of the encouraging indicators include ongoing inventory liquidation, rising demand, and a decline in major ocean freight costs. Furthermore, the current favorable pricing environment for the Indian shrimp farmers strengthens the potential for increased shrimp cultivation in India over the near to medium term. With that, we can now open the floor for question and answer session. Thank you very much. Sejal.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Thank you for allowing me to ask you a question. Sir, I just want to understand what is the current capacity utilization in terms of shrimp production?
The current capacity utilization for the Q4 was 29%. For the full year, it was 30% actually. Last year, as you know, in the earlier quarters also, there was a decline in the overall utilization of the capacity. For the full year, it was standing at 30% only.
And sir, can you also guide on the inventory levels? How is it panning out in Q1? And also with respect to the global demand, because in the Q1, and what do you expect going forward in FY'26?
See, overall, as stated earlier in our opening remarks, definitely our customers are also they have been seeing a good sales on their end, thereby creating a demand for the products from our side, which also is making way for us to use even our inventories also, our company's inventories. And within the present scenario, we also need to acknowledge about the uncertainties which are prevailing, which also has been stated in our opening remarks. as you know that it's kind of a global trade war-like situation where, because of these reciprocal tariffs which have been levied by USA, which are currently at 10%, which are there affecting in the Q1 from the Q1 of FY'26, which you asked specifically. Of course, however, those tariffs are all being taken care by the customers to a large extent. They are being taken care overall. So because it is a US specific scenario. But as you know, we cannot exactly predict whether it is our major market like USA, how they are going to decide in which direction. We are very positive. We remain optimistic on the part of the trade talks, but end of the day, we should see how the results will come out. Because we do notice every day, every week, we understand that the talks between India and USA are very positive, and they are looking forward for a early agreement. But at the same time, we can't put in our entire, we can't be on a high optimism as such, because we also have to be a little bit cautious. That's why we specifically mentioned that we are cautiously optimistic, because certain uncertainties still loom around. So we are waiting for those results, but definitely, as there are more, concrete steps are being taken by both India and USA, especially. I think that will be more positive. So we are looking forward for any such, final decisions which are done in such a trade deal between India and USA. That is regarding USA, but in the case of other countries, we have been able to diversify very well into the other markets. And one of the important point is with regard to EU. So our European sales have been picking up from the beginning of last year, and we continue to bet high on them currently. So we'll continue to, but still, of course, we will still have USA as our major market, but in one way it helps us to, in a good, well-planned diversification. So that is definitely going to help us in the case with regard to our business for the current fiscal of FY'26.
Yeah. Okay, sir. So my final question is with respect to the earlier guidance of 12,000 metric tons in FY'26. Is the guidance still intact? And also, with respect to the ready-to-eat division, what is the status of the approval?
Good question. First, I'll answer on the approval part. The new capacity. Most of the facilities, as in the past 2 months, we have seen, at least, of course, the last approval was on April 1st. They are listing all the new facilities one after the other. We expect ours also to be done very soon, unlike the past when it was very uncertain. Now, in that regard, certainties have improved as they started approving or actually listing out all the facilities one after the other since March and April. Since March-April months, they have started approving all the facilities in India. And those facilities which were pending for approval since 2020 onwards, they all have been, one after the other, are being approved. And we are just awaiting anytime soon. So the moment it is done, it paves way for us to grow our ready-to-eat business also in our the second largest market of the European Union. That is to answer your question on that. And with regard to the volume for FY'26, as we definitely, if as the certainties increase and improve, definitely we will be looking forward to do that volume if certainties are increased. So we are awaiting, because as you know, of these uncertainties which are there. We expect that such uncertainties should be cleared off by the end of Q1. We expect that, especially with regard to the trade deal announcements and all that. Hopefully by the end of Q1 or early Q2, it should be cleared. That will definitely, we can look forward for, because we still are dependent on the US market, which will be a major market. So when we talk about the volume numbers, a majority of the volume will still continue to be shipped to the US market. So we will have to just wait for that at least till the end of Q1 to, once the trade deal or once these uncertainties are removed from the market scope, definitely we'll be able to be more concrete on that.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Siddharth from iThought PMS. Please go ahead.
Hi, sir. So my question is, you said that EU is slowly approving facilities. Out of your current capacity of almost 34,200 metric ton, how much is unapproved by the EU?
25,000 metric tons.
So if this approval is received, you will be able to sell almost 25,000 metric tons to EU.
Well, if the approval is there, first thing we will be able to open up our ready-to-eat production lines, which we are currently missing for our business for the EU market. Yeah. So that ready-to-eat production lines especially are to the tune of around 10,000 metric tons on an annual basis.
So you will be able to sell, including the ready-to-eat, you will be able to literally sell if there is demand, or literally almost.
No, obviously, correct. Obviously, when the market access is not there because of some regulatory issues which have been persisting for quite a number of years, and now as these approvals are being provided facility after facility, and we are just maybe today or tomorrow, we don't know, we are just waiting. Now it's more certain. They have been allowing all the Indian facilities which were blocked for almost 4 years in a row. So that is good. So that's a very positive sign. So definitely we'll have the new capacity, including the 10,000 metric tons of ready-to-eat, will be made available. Correct.
So, like a part of that question I have is in your opinion, are there a lot of capacities in India which will be like yours, wherein they will get approval from you in the near future?
Well, there have already been capacities which have been approved in the past.
But, are a lot of capacities awaiting approval?
As I stated, they have been waiting, and some of them have been given in the past 2 months, March, April. Some are yet to be given. But it is not just about getting approval from the country. It is also having market, the requirements of the market also to be met by the respective facilities or entities which are involved in the processing and export of these products. So there are. It's just not about having an approval. You can have an approval and you can also lose it if you do not, follow the required rate. Yeah. Sorry.
So sir, let's say we get approval from the European Union.
Yes.
Will we be able to take away market share in the EU from countries like Ecuador and Vietnam, in your opinion?
We are confident that we will be able to target some extent of market share from Vietnam. Ecuador we are not competing with Ecuador on the ready-to-eat products in EU. India is mostly competing with, whatever little competition India gives, it's not a major competition in the EU market, but whatever little competition India gives, it is mainly against Vietnam, other Asian countries. Yeah, Vietnam and Indonesia, like you said.
If the products which are sold, barring the ready-to-eat in, let's say, EU, are they value-added products or commodity-like products?
They are value-added products. Mostly whatever in Vietnam and Indonesia does is value-added. Whatever Ecuador does is commodity. We are in between.
So I just want to clarify, the quantity which Ecuador sells in EU is largely commodity-like products.
It's the raw material which is just frozen. Which is basically there's no processing done except, it is just the raw material which is frozen. So you get the point? It is just head-on, shell-on, basic product where it doesn't require much of processing to be done. In fact, almost more than 60 to 70% of Ecuadorian exports to the world, mainly to China, number one, and followed by European Union, it is mostly head-on, shell-on, which is like you asked, it's a commodity shrimp, which doesn't require any processing, any significant processing. I'm sorry, I shouldn't say any significant processing, and it is just, freezing the raw material and shipping them out.
Understand. So, like, our competition is going to be Vietnam, not Ecuador, in EU.
In the EU, it will be mostly Vietnam and Indonesia, especially. Correct. Which we are. Actually, we are even competing even now, and we will continue to compete even in the future. Yes.
Okay, understood. I just have one more question. Like, in FY'25, the Apex made almost 50 crores cash flow from operations, right? And you just had 5 crores of fixed asset investment. Okay. Do you guys have any plan on what you are going to do with the cash? Are there any investments that you are planning the next year?
Not in the next year. Right now, there are no plans for additional investment except for some, some power backup systems and all that, more to look on efficiency factors to improve the efficiency and the cost with regard to reducing energy costs, or basically mainly any investment which is going to be done in the current, in the next 1 year is mainly to improve the efficiencies in the existing capacities, mainly for now, so that we can utilize them better. As we are looking forward to utilizing the capacities better, we obviously want to do it in a more efficient manner so that we can bring down the overall costs. That is
understood.
That is the plan for the first immediate year, current year. Sorry.
Thank you, sir.
Thank you.
Thank you. Before we take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Purushottam from Wise Old Bird Limited. Please go ahead.
Hello. Sir, I would like to know, we have this UK FTA, that is bilateral agreement that's been done. So, but we do not have anything for UK as of now. But our main concentration is on EU. How do we plan to have geographical expansion? So whether this UK FTA agreement will benefit us, or because if we see the major export markets for us is US, and recently in the last couple of years we have increased to EU, and rest nothing much. So we do not have anything from China and Japan. I have read some time ago that we are also concentrating on these markets. Whether we are targeting the UK markets.
Actually, UK is also there, but the current year it was mixed in the others category. Last year, FY'24, we did more to UK, but this year it has been reduced in FY'25. Last year it was almost 7.5% of the total. Sorry, that is in the quarter, but on an year-wise, if we see, UK is last year we did 3.4%, and for the full year, this year FY'25 it is 5.1% for the full year. FY'25. Our UK sales is 5.1%. So it is more than China and other countries. We currently we believe once it is effective, the FTA is effective, we believe it will give us advantages for sure, because the customers also will treat us, with more, they will be more positive in doing more volumes with us. So we can definitely take it up to at least minimum 10% in the first year. I mean, given whenever the FTA gets fully implemented, the announcements are done. Of course, there will be procedural steps which are yet to be taken. But our customers are positive, but they are also, as I stated, are awaiting for the implementation.
Okay, sir. Another question, thanks for that. Another question is on the ready-to-eat product, right? So you have explained that we might get any time the approval for that, and if we get an approval, whether we will be able to utilize the complete 10K in a span of 1 year or 2 years. When do we expect that?
Generally, the stated capacities, 80% of them is very optimum. So even let us say even in a 10,000 tons out of 8,000 metric tons, for example, if within the EU, and we are not just going to entirely depend only on the EU market alone, but of course we will also be pushing our retail sales overall to the US market, which is the major user. The retail segment is a major user for the ready-to-eat items, where definitely that will be quite helpful. I mean, for the EU-wise, definitely once the approval is there, but we will also be pushing our sales to the US retail, and thereby want to utilize the ready-to-eat capacity even more than what we have been doing in the past 2 years. That we are definitely focusing on that. So if the EU approval comes, it will be an added boost for the overall capacity utilization.
Okay, sir. So any rough estimate of capacity utilization for ready-to-eat, what do you have in your mind for FY'27 or FY'26 and 27, ready-to-eat and the normal, all other rest others?
As stated earlier, and as you know, the uncertainties still loom around. We are positive, but at the same time, we are, just watching because of these various uncertainties which are there. And we will continue to depend majority on the USA, and trade actions, tariffs, all these will definitely play a role in how the business is conducted overall. But definitely with certain positivities at the farm gate level, farmers looking forward for stocking and more supply being made available, and to support that demand from the overseas markets remains consistent, as India has definitely proved its position with regard to delivery and also consistency in the product supply. It is definitely a positivity which is there for India in general for the next 1 to 2 years. However, we have to keep this tariff actions or trade actions, in mind. So with these uncertainties, it is really getting difficult. And because, how to phrase it is like, if everything is running in a very systematic manner, it is different. Because here even our customers, especially in the US, are a little bit, not only US, I mean, customers in the EU as well as some of them in China are also a lot of uncertainties, because US tariffs are not on India alone. They are all on multiple countries, which thereby affect the overall, because you need to understand, if one manufacturing activity in one country gets affected because of US tariffs, that does affect that country's overall consuming patterns also. So which means, tariffs in USA necessarily need not affect the business to USA only. It can also have an impact in other countries also. So these uncertainties are looming around, and we expect those to be cleared hopefully in the next 2 months maximum, June, July. I think hopefully by the end of this month or early July, we should have some better clarity. And once we are living in a certainty world, definitely we will be, able to say at what rate or at what, at what extent we can do. I hope you understand what I'm emphasizing here.
Yes, sir.
So does that
Yeah,
answer
thanks
your
for that,
question?
sir.
Okay. Thank you. The next question is from the line of Amit Akecha from HG Hava. Please go ahead.
Yeah, good morning, sir. Am I audible?
Yes,
Yes,
sir.
please. Yes, please.
Yeah, thank you for the opportunity, sir. And so my question was from last 12 years perspective, like if you note from March 14 onwards till the COVID, March 19 or 20, you can say, the revenues and net profit and everything was on the uptrend. The margin, or EBITDA margin also was increasing from 6% to say 10, 11 and onwards. But post-COVID, like something has happened, like the revenues are also like stagnant and the EBITDA has fallen and the net profit has also come to single digit now. Can you just put some insight and what are your comments on it?
No, definitely. Okay. I mean, this has nothing to do with COVID specifically. But of course, definitely COVID played a role in everybody's lives. But as far as the business trend is concerned, for the capacities, what we were having of our own or even on leased basis at that point of time before COVID, and finally post-COVID, whether we are having our own capacities. We did do, I think FY'22 was overall it was a good year for us post-COVID. I mean, especially considering, we actually did our historically high numbers, I think, as far as volumes are concerned in FY'22, I guess. And the thing here is, post-COVID, we did face certain challenges. Again, not specific to COVID, but overall market dynamics changing. And obviously, we did lose some of our customers for a brief period, at least for a year, like 2 years ago, which has happened in 23 and little bit in early 24, which we have been gaining them back. We did also, overall, we did lose some of our market share to our competition in Ecuador to a certain extent, which did happen. Some of our sales which we were doing, we also did. Ecuador also played a role in general, but in our company specifically, certain customers did switch to the Ecuadorian supply, which did have an impact on us directly. That is one of the reasons where we started also pushing to other markets, and I mean, whether it is the EU, especially the EU, we have been diversifying. And FY'24, if we FY'24 and FY'23, FY'24 and FY'25, if we look at it. Hello?
Yes.
Yeah, FY'25, definitely we are looking at a turnaround. And since towards the end of the year, we have been seeing a better Q4, and thereafter we have also seen a better increase in our our order book also compared to the earlier quarters. And we believe that we will be able to do better going forward. There was a gap in between for almost 2 to 3 years, like you rightly pointed out, especially FY'23 and FY'24, FY'25. Last 2-3 years, it has been a little bit slow. But we have been taking steps to, especially with regard to some of our loss of sales in the US market. It took time also to get it replaced in the EU market. But finally we are there. And we are also, parallelly, we have also been able to regain some of our customers back in the US also. So overall, this did have an impact for almost 2 years with regard to our sales, definitely. As far as margins are concerned, obviously, the pricing which has been, affected, of course, at the farm gate level also it was higher. Added to that, the company had been having some provisioning which has been done for some legacy related issues, like earlier some like hatchery debtors and all that. They were some of them were also there, which were also creating a overall issue for the company. So we had to do away with all those, which was being done in the past 2 years especially. So that is one. So these were all like the one-offs based on the progress being done on the recovery, and eventually the call was taken, and the company had decided to basically do away with such sort of old bad debts rather. So obviously that also affected the overall profitability of the company to such provisions. Those have all been cleared off. So that was on the you specifically asked both on the revenue as well as sales as well as on the profitability. I think I answered on both the points.
Yes, sir. Specifically, I'm talking about the EBITDA as well, sir. It was for 4 years, it was in the range of 11 and 10 and 11 and 11%. Then started falling down to single digit, 9, 8, 5, 3. There's a constant fall in EBITDA margin. So what immediate steps are the company taking to at least bring back to 10% level again?
Well, the only way to actually increase the EBITDA overall is obviously to have a better realization or higher realization, given the costs increasing. It is just that our sales prices obviously have been very kind of muted, not in a very firm manner. They have been slow because of the troubles at the destination markets. But at the same time, the cost escalations at the farm gate level here also definitely impacted us overall on the EBITDA level. So that is the only way to that is we have to enhance our value, obviously, and we'll have to look at for selling at a higher price, which we cannot do in the products what we have been doing in the past. So that is one of the reasons we are also changing the products, or rather going for which we have been planning for the past 4 to 5 years to do, and that is what we have to increase. Definitely, to increase on the EBITDA level, we also definitely have to increase our realization value, definitely. So that is the main part which is there, because cost escalation at the farm gate level is in keeping our farm gate prices quite firm. Obviously, there will be periods where we will have tailwinds at the farm gate level also, like we may have sometimes, like as we have currently, for example. We will have those, but they are not going to be there through the year. So in order to support an EBITDA growth overall, we will have to focus on getting an enhanced value, and depending on the products what we do. We also are working on that, changing the type of products so that we get a better realization with the given increase in costs at the production level.
Sir, may I ask one more question?
Yes, please.
So assuming the present status quo, like the uncertainty about tariff and everything is okay, assuming that suppose hopefully that 10% thing stays, then is it possible for you to give us the volume realization or margin guidance for FY'26?
As I think one of the earlier participant has mentioned, it is true, we gave a number of, earlier we said around 12,000 metric tons for FY'26. So we are definitely going to work in that direction. But on the margin front, I'll not be wanting to give you any specific guidance at this point immediately. But I would rather want to wait more for the end of the first quarter. So on the volume front, we are looking forward to do that 12,000 metric tons minimum for the FY'26.
Thank you for answering in detail, sir. Thank you, and all the best for the future.
Yeah, thank you.
Thank you. The next follow-up question is from the line of Siddharth from iThought PMS. Please go ahead.
Sir, like you mentioned for the previous participant that something which I wanted to ask about. like this quarter realization is up 20% year-on-year and 6% quarter-on-quarter. And you also said that there's been a turnaround based on the sentiment right now. Like, can you expand on that? Do you think that?
Sorry, go ahead. Sorry.
Are you actually sensing that this is the time that this industry is in the like going to be better off from this point onwards?
Sorry, our answers, our responses were not about industry in general. We were specifically talking about our company. Yeah, as a company, the reason being, of course, we also were very transparent in acknowledging that we did lose some of our sales to some of our competition in other countries also, and which we have been gaining back in the past few months. And at the same time, when we stated that we have been focusing on diverting to other markets also, which is very much evident with the way we have been growing, especially in the European Union, and we continue to pursue other markets so that we can still have a overall very positive growth for the company. In that respect, we have stated that we believe we are come out of the negatives, which is basically heavily concentrated almost to the extent of 80 to 85% in one market, which was the USA at that point of time. And so all that was in that context. We have stated that it is we have a kind of a turnaround situation in the year FY'25, and we also stated that we are done away with some of those legacy issues which were hanging in the company related to any sort of provisioning and all that, which have been done, which that has been taken up in the past 2 years. So obviously, I have called it a turnaround for the company because we are done with all those old problems, and that and not in any generalized manner for the industry overall. We can't state anything for the industry. Yeah.
So let's say for Q4 is the weak quarter for this company, right? Generally
Q4 is less sales usually. Usually Q4 is for the industry overall because the supply also buying also will be, most of the buying will be done for Q1 and Q2. Overall, what you rightly mentioned, usually first half is the major business which is supposed to be there. Again, that was not the case in FY'25. Also, if you look at it, the first half, comparatively, only one quarter in the first half was good. I mean, good means on the sales volume wise, even though it was lesser compared to earlier periods. But Q4 is overall, it is a little bit lower, yes. Generally,
so, like the realization is up 20% year-on-year, right, in this quarter. So, is it because the demand is revising?
Yes, we have the realization. No, there are also one is unit value. One is unit value per a dollar in dollar terms, like you rightly mentioned. The demand has picked up, and the pricing also has improved, especially from the middle of Q3 onwards, which definitely reflected in the sales of Q4. Added to that, we cannot ignore the factor of currency equation here. The rupee also has depreciated, or however we want to call it, as the dollar has appreciated. And that also is one of the factors which plays the role. So if we look at it, Q4, the average realization was 794 rupees per kilo, compared to Q3, which was at 749. So this is not only, there were two factors here. One is the unit value overall because of the demand, and at the same time, depreciating local currency also supported it.
How much is the contribution of this currency?
Well, in the overall scenario, we have seen I think it was roughly around 3 to 4%, I believe, was on the currency front, roughly around 4%. Roughly.
This is year on year, right?
No, during the year, I was specifically stating during the year, the currency itself has depreciated well. In fact, it peaked up almost to 87 and odd. So that also is there. It plays a factor. But at the same time, our unit value in dollar terms also, it has grown by almost 7 to 8% additionally in dollar terms.
Okay, 7 to 8%, understand.
Yeah.
Now, one more question I have is 8 rupees per kilo.
Sorry?
To interrupt, Mr. Siddharth, I would request you to please repeat your question. We lost your audio.
Oh. Okay. So,
Mr. Siddharth, we can't hear you.
Yeah, okay. I have it. At the current raw shrimp price of 358 rupees per kilo, are the farmers making money?
See, farmers making money is something which we would not be able to answer entirely because it depends on multiple factors there, not just limited to their costs, but also their output, their farm level conditions, their efficiencies. So it depends on their planning. If they are doing multiple harvests in a single crop, it plays a different role. And if the growth of the shrimp is not there at the farm level, that plays a negative role for their overall that cycle, that crop. So we wouldn't be entirely able to say that because it depends on how each respective farmer has their output or their harvest happening. Now, as an average price of 358, you need to understand it's an average of multiple sizes, depending on what we did. There could be another company which may have 380 rupees as purchase price, average purchase price, but at the same time their sale price also could be higher because depending on what sizes they have been doing. So there could be somebody who would be doing larger sizes, obviously it will be at a higher cost. Of course, it should also reflect in a higher sales value. So the 358 rupees is something pertaining to our company's purchase price during the quarter. Please understand that. This is not what the farmer is getting literally. It could be depending on what sizes he is harvesting. We buy anywhere between 250 rupees to 500 rupees. That is the range depending on the sizes. So we wouldn't be exactly be able to answer that because it depends on what they have harvested and what were their costs and whether they got the yielding in a reasonable manner or they had a negative yield where they lost and their cost escalated. So it entirely depends. But in a general perspective, they are okay as long as they don't have problems. Means any sort of disease problems or anything, they are okay. So most of them have been fine. They are reporting. They are again, to be precise, if your question is in today's market scenario, are the farmers okay? We find them to be okay. They are going for stocking again. We see our seed sales improving. It is also going in a positive manner. We do understand that the farmers are positive for now. Unless things go south, negative, then it is different. There were certain corrections in the farm gate prices even in Q1, that is in the current quarter, Q1 FY'26. That obviously is related to all these tariff actions and all that. But overall, they are fine. They are going. It all depends on the farm level conditions rather than it's not entirely dependent on the pricing alone. Please understand that because their costs get affected based on how their farm level economics work. Not just on the cost, but also dependent on their survivabilities at the farm level. Okay?
Okay. Thanks.
Thank you.
Thank you. The next question is from the line of Tom from Geojit Financial Services. Please go ahead.
Hi. My first question is regarding EU approvals. What are the kind of client relationships we are having? Like how confident we are regarding a certain sales volume we can generate out of EU if we get the approvals?
We already have relationships with the EU customers who are willing to support us, and who are looking forward for our approval to happen so that they can also start buying the products from the new facility. The second facility. Yeah.
Okay. Can you give us an approximate volumes like what we can expect from EU post approval?
Well, we will be able to grow it at least minimum 30 to 50% in the first 1 year of approval. That is how confident we are based on our relationships and how the overall market demand in the EU is happening.
Okay. In absolute terms, that would come to around?
That roughly 1 minute. We'll be able to grow around 2,500 metric tons in the first year itself for the EU market alone.
Oh, 2,500 metric
tons. Additional volume. Yeah. Roughly, approximately. Yeah.
And regarding UK volumes, is there any approximate growth or absolute number you could give us?
We will not. We will wait for the tariff. For the FTA to get implemented. I think we'll be able to give even a better, because that keeps changing. It has been higher last year to a certain extent. I mean, last quarter it keeps changing on quarterly basis, but overall it had increased. But we believe we are looking now. We are starting even ready to eat products to the UK this quarter. We are also starting then. So immediately, I think we'll be able to give much better clarity, hopefully positively next quarter when we get the clear indication of the effective implementation of the FTA.
Okay. Now, my second question is regarding the farm gate prices. Is there a decline from March exit till the current situation? Like, what is the kind of farm gate prices for the like sizes right now?
Roughly around 8 to 10% reduction was there. I mean, roughly, let us say it is currently sitting around 7 to 8% lesser compared to what it was in the month of March to now. Roughly, I'm just saying. I mean, it went lower, but again, marginally it will pick up. That keeps changing demand depending on the demand and supply of sizes and all that. But overall, post tariff announcement, there were corrections. Yes, at the farm gate level.
Okay, and the average Q4 farm gate prices was?
That the average Q4 farm gate was 300. I think that was discussed earlier with the earlier participant. It was 358 rupees for us, for our company. Yeah.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Saurav Shah from QRC Investments Advisors LLP. Please go ahead.
Yeah, hi. Thank you for taking my question. So just want to understand, since the big tariff announcement in early part of April, what have you seen in terms of buyer behavior change from your clients and customers in the US largely? Are they trying to pre-buy? How are they sort of dealing with the uncertainty, and what impact is it having on our business?
Well, definitely there was a lot of chaos. There was a lot of, kind of confusion which was created during the first few days of the tariff announcement. But subsequently, when the Honorable President of the United States had announced to keep the increased tariffs beyond 10%, whatever they were, like for example 16% in the case of India, in abeyance for 90 days, definitely that kind of cleared the air for many customers to continue their purchases, number one. Number two, with the increase in prices, sales prices due to this 10% implementation, which is definitely implemented on all the cargoes, all the shipments from the beginning of the current Q1, pretty much most of them, all of them actually. These prices were also there in 2022. It's not like these prices are something very high, abnormally high, that the business cannot be conducted in the US market. So we have been selling at these levels even in the year 2022. And then there was a correction, of course, a big correction in 2023, subsequently to that. And now, post this tariff announcement, we are back to those numbers. The customers are continuing to buy at this, considering that the tariff rates will be at 10%. But post 90 days, we need to see how the trade deal is going to happen. Definitely everybody is very much cautious, even our customers. They want to see what is going to happen post July 7th or July 9th, once this 90-day extension period is done. So we need to see how it will happen. Meanwhile, if there is a trade announcement, hopefully between India and USA towards the end of this month or early July, that will be very helpful for sure. Or whether the Honorable President of the United States will again give another extension or not. So those uncertainties still remain. What will happen, how this will be there. And yes, our customers are very cautious. They are, looking forward. For example, the purchases, what they have been making, they have been very, very concrete on the shipment dates, delivery time schedules and all that. But at the same time, the buying has not stopped. In fact, we are working on some new programs which are going all towards the end of 2025 and early 26. It's not that people will stop eating shrimp because there are tariffs. They will create some space there's some little bit of pressure, definitely, on the price point. And we also have seen many announcements by end retailers also in the USA, because this is not shrimp alone. The tariffs are hitting across the board on multiple products. So overall, the retailers are also planning to increase their prices, their selling prices. So obviously, it will be the end consumers in the USA who will be taking some of the increase for sure into their costs. And as we stated earlier, these prices are not new. These prices have been there earlier also, just 2 years ago. Almost 3 years ago. In 2022, we have been selling at these levels only. So it's not something new. But confusion still prevails. So the cautious approach still prevails, both from the customer side, even though they are planning for programs for the rest of the year, for the holiday sales, and also early part of 2026. We have requirements coming in for both Q4 and Q4 of current calendar year, as well as Q1 of next calendar year. So different programs are being worked out, but they are very cautious. We are also cautious. We are just waiting. But overall, people need the product. The customers need the product. Consumers continue to consume the product. It's not that they stopped consuming because tariffs have come in. And that's where I was trying to emphasize that these prices also prevailed 3 years ago. These prices are not something historical high numbers. We have seen higher numbers than these in the past. Okay?
Sure. And if I may, now that we are quite close to getting the approval for the RTA line, can you maybe help us understand how does this sort of improve our realizations and margin profile, let's say, versus ready to cook? What can we expect in terms of margins especially?
First and foremost, there will be an increase in sales in the ready-to-eat for sure for the markets of EU overall. We look at a better realization for sure that will be increasing almost, we look at it almost 10 to 15% better realization part minimum. But at the same time, we also have to look at the additional costs which are involved for doing those products. But main thing is we have to understand that even though the ready-to-eat product capacity will be made available for the EU market, we are expecting in the first year, as we stated earlier, we are expecting a marginal growth in the first year, and as we continue to deal with more retail markets in the EU, we are not able to approach to certain customers even today without having access to that product, that capacity. Obviously, we cannot talk. So for every solicitation of product requirement which comes our way, whichever has any ready-to-eat component, we are currently ignoring that entire requirement because we are not able to produce that. So such kind of things will not happen, obviously, when we have the access. So we will be able to do it in a better way. Yes, in general, realization-wise, always between ready-to-cook and ready-to-eat, almost a minimum of $1.50 minimum difference will be there, $1.50, depending on the sizes and the type of products again. So minimum difference will be there. But and of course, with the additional costs and all that, we can also look at around 40 to 50 cents per kilo additional margins. But it all depends. Finally, after that 40 to 50 cents, we have additional costs also. But we have to keep that in mind. So we are just waiting for first to start the sales in the ready-to-eat once the market access is provided to us.
Okay. Thank you very much, sir.
Thank you. The next follow-up question is from the line of Purushottam from Wise Old Bird Limited. Please go ahead.
Yeah. Sir, I want to know, because our company is being a visionary company, so we started from leased capacities to own capacities and from ready to cook to ready to eat. So what is the vision that the company has for next 5 years? How do you see? What are the geographies that we target? How will be the revenue contribution from each of the geographies that we have in our mind? And how does the whole scenario look? If the company has certain plans, right? Yeah, we wanted to know that.
We have amended our ideas and visions over the past few years. So definitely we want to reduce our dependence. Our company-wise, we have seen certain examples in the rest of the world, and we want to reduce our dependence on one market, which we have been doing. And we want to, like you rightly mentioned, we want to diversify very well into several other markets. And, thereby, of course, in our volume growth, we want to use that capacity for all other markets rather than, the existing existing market rather, where already there's enough of volume which is being done. That is one part. So obviously, which means that we will be growing our volumes more into other markets parallelly. Thereby, at some point, we believe we shouldn't be doing more than 50 to 60% of our total volume, more than 50%, we shouldn't be doing to any one country. I don't want to take any names here, but I think we should cap it up like that, so that we don't do more than 50%. That is on a high side. And the more diversification we have, the less impact in the negatives, if any, we will have because of any such measures or any actions or any uncertainties which may loom around. Because we are not able to today in the rather uncertain world with the way things are going on all over. A lot of assurances are not available to us itself. So for us to give you or to provide to anybody. So we are actually, working on with caution, to be precise. But we will be diversifying more very well even in the current year. We want to push it out. And as I stated, over a period of time in the next few years, we want to restrict even our number one market to 50% or lesser than 50%. So that's how we feel in an increased volume scenario, obviously. In an increased volume scenario. We're utilizing our capacities to the optimum.
Okay, sir.
Sir, does that answer your question?
Yes.
Thank you. The next question is from the line of Mayank Patel, who is an individual investor. Please go ahead.
Hello?
Yes.
Mr. Mayank, you can please proceed. Mr. Mayank? Due to no response from the current participant, we will move on to the next participant, which is a follow-up question from the line of Saurabh Shroff from QRC Investments Advisors LLP. Please go ahead.
Yes, sir. Just wanted to know what is our RTE sales in the current year and last year in terms of tonnage?
The share of current year, of course, current year it has dropped down to 10%. Last year it was 16%. On volume terms. In volume terms, please.
Yes. Okay. Yeah.
Yes.
Thank you.
Thank you. The next question is from the line of Sriram R, who is an individual investor. Please go ahead. Mr. Sriram, I would request you to unmute your line and speak, please.
Yeah. Sorry, thanks for the opportunity. Yeah, I joined the call a bit late, so I'm not sure if this was discussed. My question is, what is the current tariff structure for Ecuador versus India, and whether the our export market share is steady or increasing?
Is the tariff structure you mean for these additional tariffs which were levied, imposed upon?
Yeah.
It is the same for everybody currently. It is 10% on all products, whether it is Ecuador, India, anybody, Vietnam. Currently, it's all at 10% for now.
Okay, so the total, let's say for the total landed cost, including other duties, what will be the structure now? This is the extra additional 10%, right?
Yes, but see, earlier the tariffs were already prevailing with regard to anti-dumping and countervailing duty. So currently, India has roughly around 7.12% roughly with regard to U.S. market. In the case of Ecuador, they only have I think they only have one duty, which is in their case they have CVD duty, countervailing duty. They have 3.78%. Ecuador is at 3.78% currently.
Okay, so 3.78 versus 7.1. Okay.
Yes.
So, but do you see the share of exports steady, or is it increasing compared with Ecuador?
See, they have certain advantages for sure on their side because they are close proximity to the U.S. market. Their delivery times are lesser compared to us, subject to them shipping. So anyway, so overall, the delivery times are lesser. For them, it takes 10 days. For us, it takes around 45 to 50 days. That definitely plays a role in the customer's decision making also. But the overall scenario is such that we have the ability to produce the products which the US needs in a much better and bigger scale compared to them. That's how I would keep it. So it's not like what products we can produce, whether we are producing the products which the market, that specific market needs or not. That is the more important point. Most of their products, their production is based on, as we stated to an earlier participant, it's basic commodity, which is mainly exported to, China and the countries of European Union. And their third biggest market is United States, whereas many of the Asian players, Asian countries have USA as their biggest market for the products which are required by USA. USA doesn't buy a lot of the commodity-based, head-on, shell-on product. They need more value addition, obviously. So which India is able to do in a better scale for now, currently. Yeah.
Okay. That helps. That helps. Thank you.
Thank you. The last question is from the line of Mayank Patel, who is an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, sir, you are.
Okay, so my question is regarding the borrowing and the expenses incurred by the.
Great. Sorry, can you repeat that?
Mr.
Hello?
Mayank, I would request you to please use your handset.
Hello, sir. Am I audible
Yes,
now?
please. Yes, please.
Okay, so my question is regarding the borrowing. What is the current borrowing of the company?
The short term, on the 67 crores.
Okay. And regarding the expenses, so the major cost for expenses, are we paying for the repayment of borrowing or what? Because it is like 153 crores for this financial year.
Sorry, 150. Yeah, finance expenses is not 153 crores.
In other expenses row, I can see like it is 153 crores.
Other expenses is not. Other expenses includes ocean freight, many other expenses. It's just not finance. It's not finance costs.
Okay. And in the bottom of these presentation, I see the export benefit which is provided by government, which is 454 million for financial year. So if we reduce that from EBITDA 297, so the company is slightly in loss. So is it so?
Currently, in the current quarter, that is how it has been overall. Yes. Currently, the situation is the export benefits are supporting to a certain extent. And please, you also have to keep in mind with regard to our sales in USA, we are also paying 5.77% as our countervailing duty, which is mainly being levied on us because of these so-called export benefits. Okay, so it's not.
Right.
Yeah, it's also getting negated there, so you need to keep that in mind.
Okay.
So
and
our
government.
Yeah, sorry. Go ahead, please.
Okay, so government recently announced in budget that in fishery sector some custom duty has been reduced to 15% to 5%. So how much reduction is we expect in expenses part with that reduction in duty?
So the duties were not reduced directly on the processing sector. Right? They were all related to the primary production, which is related to feed or the hatchery feeds, the shrimp feed manufacturing related aspects. They will benefit in the medium term and long term. They will benefit the farmer mostly.
Okay,
the primary
basically, it is from farmer, not the processing company.
which eventually helps the processing company. Obviously, if their costs come down, we can remain competitive in the global markets, right? It is linked,
Right.
but it is indirect. It's an indirect one.
Okay. And one more thing, last question. Recently, I read somewhere that PM Modi chaired a meeting with the fisheries sector's representatives. So, what's the government take on this, or how government intends to support this sector or companies? Can you have some insights?
I'm sorry, but we know that there were meetings held, but we don't have the specific details, and they were more government to government ministerial level talks, which we are not privy to, so we are not fully aware. But we believe it's more to increase the overall gist is that the whole idea is to increase the production of fisheries from the country. That was what we understood in a brief manner. So in one way, it is good if the overall production increases in a cost-effective manner. Definitely, we can remain more competitive in the global markets. And as ours is mostly export-driven and not much in the domestic market as far as shrimp is concerned. So definitely, it will help us.
Okay,
Such
thank
measures.
you.
But we don't. Yeah, thank you. Okay.
Oh, okay.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Chaudhry Karuturi for closing comments.
Thank you, Sanjay. Sorry, sir. Thank you one and all for making to our investor call of Q4 FY'25. And we request you to reach out to ir@apexfrozenfoods.com for any further queries or clarifications you need. Thank you very much and have a good day. Thank you.
Thank you. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.